There's a lot of stuff we got to talk about. Rory, I want to start with you.
Yes, sir.
CleanSpark, I think, is one of these businesses that everyone has heard of. They see you guys on Twitter, and they're trying to understand what is unique about the business compared to other businesses. How do you guys think about, what is the N of one? What is the reason why so many people are attracted to CleanSpark?
Yep. I think that's a great question and very appreciated, and also just appreciative to be here. I think if I had to boil down what makes us unique as an organization, again, it's hard to not go back to cliches, but what I think has been incredibly impressive and clearly true about my time there is that it's about people, and it's about culture, it's about rigor, it's about transparency, ethics, and people that are truly mission aligned. It's the most fun place I've ever worked. It's the hardest I've ever worked. I worked on Wall Street for a decade, worked my ass off, worked many late nights, was on the other side of those deal calls when you were on your very late honeymoon. But I've never worked harder at a place. I've never had more fun. I've never done it with better people. And I think that goes all the way down from HQ to site selection and energy development, all the way down to the way that we develop and run our sites, to the techs that are managing the machines.
What's up with Orange? What are you guys doing?
Well, I'll kind of go off for Rory in terms of how we differentiate ourselves from other DATs. Orange is the largest Bitcoin treasury company in Latin America. We're listed in Brazil, B3 Stock Exchange. And we're inherently differentiated because we are in a completely different market than a lot of these other digital asset companies. We have a different regulators, different investor base with different investor behaviors, different tax treatments, and then from there we differentiate with our capital structure and the products that we offer to the market eventually through our operational lines of business. And I think ProCap, similarly, you guys are differentiating yourselves right now. I think we're in this time in the digital asset treasury industry of differentiation of, how are we creating a sustainable business model? And I think over this last couple months and the challenging market conditions, we're seeing the cream separate itself from the crop, and decisions that were made 6 months ago, a year ago, are starting to prove fruitful for organizations who were conservative and also appreciated Bitcoin's vol with their capital structure and their decisions. And so Orange BTC is in a good position today. We have very low leverage ratio, and we're looking to be very active in both our operational lines of business as well as accumulating more Bitcoin on our balance sheet.
Let's talk about managing the treasuries. I think that's probably one of the most interesting parts. It's like there's this whole activity of how do you get Bitcoin onto your balance sheet? But then once you have Bitcoin in cash, what do you do with it, right? How do you activate it? How do you drive yield? How do you think about risk? All stuff. Maybe just each of you talk about the philosophy behind that treasury management, what you guys are doing, and maybe even specifically around risk management when Bitcoin is being hyper volatile and there's kind of other considerations.
Yeah. I think, at Orange BTC, we have about 20% of our Bitcoin treasury earmarked for so-called Bitcoin income generation, Bitcoin yield strategies, Bitcoin activation strategies, whatever you want to call it. And the first thing, it comes down to due diligence. I mean, if we have any kind of counterparties, we're extremely risk averse, and we have a very rigid kind of process of doing due diligence on our partners. And then, Rory and I were talking about earlier, it's about internally building out the internal controls as well as the processes, the trade operations, having the right personnel on your team internally that you can execute on these, whether it's derivative strategies, whether it's different arbitrage strategies that you see, whether market structure inefficiencies, ways to make your Bitcoin productive in a way where you're getting yield, but it's in an extremely risk-averse way, whether it's the right counterparties, whether it's the right strategies, making sure that you have control over the keys to your Bitcoin, have oversight of what's happening if it's some kind of SMA structure. And so I think it comes down to internal controls, processes, due diligence, making sure that you're taking proper risk management before you even consider any of these yields. 99% of the yield strategies that come our way, which are a lot, it's a no. It's a no for us. And that's how we're going to operate in the future as well.
Yeah, I just couldn't sounds good. I mean, I couldn't echo and reflect that more. I think one of the things I'm most proud of with the work that we've done in the digital asset management group is that we went out, over a year ago now. It was it was December of 2024 and January of 2025. And we did a comprehensive RFP process across the entire street, all the different trading houses, firms, market makers, broker dealers, etc. We took that RFP process from the background of we'd kind of adopted and adapted one that they'd used for an accounting selection, an accounting and audit firm. And so there was a rigor to that I think was very surprising to other people on the street. Look, I'm sure Orange is obviously conducting themselves that way, and there are others, but the feedback that we had gotten from the counterparties that we were dealing with was that this is the most comprehensive and rigorous process that they'd gone through in some time. And so I think that that's where it starts, and quite frankly where it ends is at diligence, rigor, and institutional risk management. I think outside of that, I think it's we were talking upstairs, and this is the part that people don't understand, is that everybody wants to talk about where's Bitcoin going? Should I buy or sell? And how do I get yield on it? And those are actually kind of the easy questions, not because it's easy to do, but because that's at the execution stage. The hard part as a publicly traded, SEC registered company is the internal controls. It's getting through audit. It's dealing with accounting treatments. It's keeping your different stakeholders on side and kind of validating your strategy to them. It's getting the board. It's getting management. It's getting internal kind of cross assets to all kind of work together. So that coordination machine is something that is really not appreciated behind the scenes, that I know that from talking with Sam that Orange is doing, and that we are certainly doing at CleanSpark.
When you guys think of these strategies on the yield, you said, there's a bunch of these coming at you guys. But you both are mentioning, okay, I want to drive yield, but I want to have no risk or low risk. What are those strategies? Right? Like, what are the things that people find most interesting? And obviously don't share anything that you're not supposed to share, but like, are there things that are pretty well understood that you think most of these folks with Bitcoin, whether they're, kind of more traditional DATs, whether they're miners, whatever, are going to pursue? And how much of that's going to be done in-house versus, using a third-party asset manager? It sounds like you guys are kind of doing a hybrid of both.
Well, we like to keep a lot of things in a house, but that's not to say if we do proper due diligence and there's some firm with expertise that we wouldn't partner with them. But the structure of that partnership is really important. We want to maintain oversight. We want the Bitcoin. We want control over the Bitcoin while we do that. So that's about managing the risk, because we can't lose the principal. We don't want to lose the Bitcoin just for some yield strategy. It's not worth it for us. And so we're thinking long term for that. But when we talk about the personnel that we bring in, the internal controls, it's getting the right people on your team that could ideally execute a lot of these strategies in-house, because we don't want to rely on any other counterparty. We trust ourselves more than we trust some other firm to do it, unless we do a lot of due diligence. So it is a hybrid, but we're, at Orange BTC, we're working through due diligence right now. I mean, Rory talked about it. Most of the work happens behind closed doors and communications and doing due diligence and prospecting certain firms. It takes time. It takes a lot of legal work. It takes a lot of how do you structure this? Because in Brazil specifically, I mean, it's important to structure these yield strategies in a way where it's economical for us to do it. I mean, there's no point in doing this risk if we are not structuring it appropriately, and then it eats into the total returns. So it takes a lot of work on the back end that people don't necessarily see. And they kind of just see the announcement at the end or the yield at the end. But that's where the real alpha is. That's where the real work is. Yeah.
You betcha. I mean, look, I think the primitives there's 5 main ways to generate alpha, right? There's better information, there's better analysis, there's better technology, there's better behavior, and there's better structure. And I think the way that we look at things is that, again, when you get to the primitives of what are you trading, at the end of the day, it's you're either monetizing time, you're monetizing volatility, and you're doing that through some simple, essentially vanilla strategies. Maybe you're putting them together, you're calling it an iron condor, but that's all just kind of fancy talk, right? As Talib would say. And so what we're most focused on from a risk management perspective, I'm glad you liked that, Anthony. Thank you.
That was good.
Okay, good.
That was good.
Shout out Talib. I think what we're most
No, that guy gets no credit on this.
he's redemption arc, potential redemption arc here, potential redemption arc.
He told me to go back to working in the Starbucks bathroom one time and then blocked me. So, he's not very good.
All right. I'm not going to get in between that. But the point being that it's that I could give you our playbook and you can't do anything with it because you don't have our business. And so what you need to figure out is how do you hedge yourself out on a diligence perspective with your counterparties? How do you hedge yourself out on where you get screwed is in positioning and liquidity, right? It's in counterparty risk and it's in trade structure. And so if we can diligence the counterparties, make sure that we get the positioning right, make sure that we're adaptive to market liquidity conditions, and then we can structure the trades and structure the strategies that we're doing. We don't have to be that fancy. It doesn't have to be that complicated. We're making 600 Bitcoin a month. That means that we're going to sell, we can risk up to about half of that to pay for our OPEX. We can take the other half and risk that to make a little bit of yield. If we get called away on that, great. Bitcoin's up. The HODL's up. The values of ASICs, which are priced in Bitcoin, is up. The growth multiple on the business is up. That's the type of structure that you need to be thoughtful about how you offset that and why we can act as a ballast in our business to lower the volatility of some of these revenue streams, drive down that cost of capital, and ultimately make the entire business a little bit more attractive as a complement and not as its own kind of outgrowth that's just functioning in its own vertical.
How much does the macro environment, Fed policy, all that stuff affect the decisions you guys make?
I mean, not really that much, to be honest with you, because I feel like we know where the end game is, and it's currency debasement, and which is the value proposition of Bitcoin in the first place. So we're going to keep acquiring what we consider the most pristine collateral that will protect ourselves against rising geopolitical uncertainty and currency debasement. You bring up the AI and the risk of deflation. It's not really technology that causes deflationary bust. It's technology coupled with a credit-based system. There's a major credit contraction. And if you see through that credit contraction, my bet is that the government and central bank won't leave that unmanaged, meaning they'll intervene. So Kevin Warsh can come out and say, hey, I want to shrink the balance sheet. Great. Bernanke said that too. So did Yellen. So did Powell. And Powell comes in 2019, there starts to be some concerns about liquidity in the reverse repo market, and he does what every single Fed chair in the past 15 years have done. All right, so the balance sheet expands. So he can talk some strong rhetoric, but when you do the math, when you actually just break down the math of the fiscal situation, you know what's going to happen. And the Fed's balance sheet will expand. No matter how much Warsh doesn't want to do that. And just look at Japan about where the U.S. will go. The BOJ owns 50% of Japanese bonds. The Fed owns like 13 to 15% right now. That number is going up, in my opinion, based on the fiscal situation, which means the currency is going to be the release valve. And so, yes, there might be some tumultuous years where there's a deflationary bust and a lot of chaos, but the printing will come out because they can't let this system completely collapse, especially if there's a lot of unemployment going. People will beg for UBI and other stimulus checks. That Pandora's box has been opened. So at Orange BTC, we're already kind of looking past this stuff and just, okay, they will end up doing this, and this will be global in nature. And we want to own the hardest, most scarce asset in the world, and as much of it as possible before this happens, ideally, as soon as possible. That's why it's a gold rush, like Michael Saylor says. So that's how we think about it at Orange BTC from a macro perspective. It's kind of like we're already kind of sitting at the end game, waiting for people to come and realize that is what's going to happen.
Well, it's in a way the deflation actually could create them printing more. They will speed up the printing because of the deflationary risk.
Right. The bet is that they will intervene. Right. That's the knee-jerk reaction. That's actually the problem. It's the not allowing the free market to do creative destruction. The feeling that they're saving things and intervening. That's the problem.
You don't feel safe?
Well, they just the banking collapse. In 2023, it showed how quickly they just continued. Oh, we got to go in and save things. Oh, there's a little bit of fire. We got to go save things. That's the problem. That behavior is more prevalent than ever. No matter what Warsh or anybody who comes in as Fed chair says.
What do you think?
Yeah, I'll admit, I think about macro a lot more than I do anything about it. My background is I spent the better part of a decade at a global macro fund called Discovery Capital. That's my grounding. It's my training. It's how I think about the world. And let's be honest, macro is astrology for guys. We just love it. Okay. Can't stop thinking about it.
True.
It's kind of true. What I would say is that to me, what we're working to implement is that macro is a slowdown or speed up signal rather than it's a do or don't or a binary yes or no. And we got our director of digital asset management, Jay Bedict, in the audience, who has joined us recently. He's building out a lot of that tooling, research, analytics, and what we're trying to do is just introduce a little bit more. We like to be data driven, not data dependent. We have a thesis and a theory. We've validated that through a couple market cycles now. And what we're trying to do is just be a little bit more thoughtful about signals to know whether we speed up or slow down. For instance, what I would give you as a concrete example of, in a significant drawdown like we saw last week, vols are higher, so we're taking advantage of some of the higher vols, but I'm being a little bit thoughtful about where we're going out into the yield curve. So you're getting this highly backwardated yield curve where basically the near-term vols are much higher than further out. And so we have a mandate. We can go out to X amount of days and we can put X amount of Bitcoin at risk. But what I'm doing is, as a portfolio manager, is thinking about kind of concentrating some of that in some of the nearer term stuff where I'm a little bit more comfortable with the outlook that I have, because I don't want to give away too much upside. If we're pricing in less volatility further out, I don't want to give away more upside in those calls if we're going to go further out and you're not getting paid for it, and you could just you could rally back. Whereas I'm a little bit more comfortable with some of this near dated stuff and taking advantage of that. So I think macro informs what we do, but it's certainly not meant to drive it. And I think similar to you, it's meant to. We have a structure. We're trying to implement that structure in the world over a series of years or decades, and we're kind of being thoughtful about market, what the market will give us as an opportunity around that, but not be driven by it.
Bitcoin went from 126 down to 60. Didn't feel
what?
But it's much less than we've seen in the past. Do you guys think that was the bottom? Do you think that these bear markets are different? How do you think about the downside?
You answer this one first.
Well, I think picking bottoms is always a tricky business.
That's why you guys are up here. Let's go.
Yeah, no, I think if we do see this situation where we see a stock market correction of 15, 20%, there's no doubt about it. Bitcoin's still viewed broadly as a risk-on asset. It's kind of stuck in this risk-on regime, despite the fact that its monetary properties and value proposition is probably more closely related to gold, like a safe haven characteristics. But still, it's not, and you can't change how the market's viewing something. And so if we get in that situation where the stocks start to come under pressure, you see precious metals continue to trade downwards, and you have a lot of leverage kind of cross asset margin, you could see a situation where Bitcoin continues to come under pressure. That's absolutely possible. I think you look at the metrics right now, and given the changing investor base, the more institutional investors involved compared to previous cycle, it's just very different. The regulatory environment, Bitcoin's stronger than it was in 2018. It's stronger than it was in 2022. You can't even doubt that. And so it wouldn't surprise me if the drawdowns are more shallow. And you look at the sentiment now, like fear and greed index at historic all-time lows, like all these factors really kind of paint it like a bottom, like previous ones. And so I wouldn't be surprised if Bitcoin gains some support here, maybe trades around this range for a while. But again, when you look at the structural value proposition of Bitcoin, the structure of the macro environment, the rising risk of currency debasement and geopolitical uncertainty, I think it's only a matter of time before capital starts to flow where it's treated the best. And that's Bitcoin. You can make an argument for gold. I just think Bitcoin's better technology than gold due to its digital nature and fixed supply. And so I think this bottom, it could be the bottom. I know it's not, but like I wouldn't be surprised if it drops. You know, I really wouldn't. But I'm prepared for that mentally. I've lived through that multiple times. But it's not really my base case. I really think that Bitcoin's stronger than it was in the previous bear cycles.
I mean, the answer for our business is that it's not that it doesn't matter, but it's.
Oh, come on.
We're building
an answer.
Okay.
The bottom or not.
Yeah. Look, here's the deal. I've been wrong. I thought that the bottom I thought that we got the bottom in November. I was very specifically at a dinner, and I kind of put my neck out there, and I said, here's what we've seen. We've seen positioning build up around 80 to 85K in puts. We've seen a sovereign wealth demand come in. We've seen kind of this big sell-off, and we haven't seen too much move in the ETFs, and I kind of thought that we were bottom there, and that was true for 2 months, right? And what I think that, and so I will admit to being a little bit confused by this move. I think that the biggest problem is not is it up or down from here. I think the biggest kind of, we all know and sense this, which is that the hyper attention meta of the markets is just not focused on Bitcoin right now. So does it come back because we get the fiscal impulse from OBBB? Does it come back because we get the Clarity Act? Does it come back because, I don't know, Larry Fink gets on TV and he had his Cheerios for breakfast that day? How does it move back around? What I know is that I've been in this space long enough to get my ass kicked enough that I know that eventually it will come back around. You can feel, it's just, you can see it in the trading action. It goes up $1,000, it comes down $1,000. There's just no interest. It's just not really the meta of attention right now. So until you see that happen, I don't really trust too much of the direction. What I do think is true is that I've been through these cycles. We've all been through these cycles. We know that it will come back. We know that the fiscal deficit is not going down, that entitlements are not getting taken care of, that we're not going to run less AI agents, and that we're not going to be more fiscally responsible globally. And so I just think that the setup is the setup, and we continue to build durable businesses through it.
I think that maybe both of you guys are just like see past all the noise, and we know where Bitcoin's going, and it's higher over the long run. Fair?
Yeah. I bought on Friday, or on Thursday, actually.
Why not today?
Let me get off the stage, and then we'll. I got to get that arch public and get those tools.
I buy every day.
Oh, you buy every day?
Oh yeah, but DCA.
Show
I've been doing that for I don't even know how many years.
One day we'll all be as rich as you and have that much money.
That's always, it's not a lot every day. You know, it's something though.
All right, thank you guys very much.
Thank you so much.
Got a daily DCA now. Thank you. Appreciate it.